Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and I'm here to give you a quick look at our top stories for the week. The gold price was on the move this week, rising from about $19.15 per ounce at the beginning of the period to just under $19.40 by the end of August 31st. Investors received the latest personal consumption expenditures price index data that day, and it shows that prices rose 0.2% on a monthly basis and 3.3% year-on-year. The PCE price index is the U.S. Federal Reserve's preferred gauge for inflation, and experts now think there's a greater likelihood that the central bank will not hike rates again when it meets from September 19th to 20th. Looking at where gold may be headed in the fall, I recently heard from Durrett of goldstockdata.com, who said the metal has been trapped for the last 18 months and won't be set free until the stock market capitulates and Wall Street realizes that the US is heading for a hard landing. In his view, gold will face a final correction as this starts to play out, but will then break away from the stock market and bounce upward. Here's how Don explained it.
Now, why will gold bounce? I think it will bounce because of fear. The fear trade will reignite. And once that fear trade reignites, gold's going to start trading higher and it's going to decouple from the stock market. So that decoupling, for me, the important number I'm watching at is 1800 to 1825 on gold. I expect 1825 to get tested here, but I want 1800 to hold. So the only way 1800 holds is if we get this decoupling and gold bounces. And, I'm crossing my fingers and praying that it does bounce and it doesn't just follow the stock market down.
I'll leave the link to the full interview with Don below. I definitely encourage you to check it out if you'd like to hear more of his thoughts on gold as well as silver. As we wrap up, I want to take a brief look at what many experts believe is a major development for Bitcoin and other cryptocurrencies. On August 29th, the U.S. Court of Appeals for the D.C. Circuit ruled in favor of Grayscale Investments in its lawsuit against the Securities and Exchange Commission. Grayscale is a digital currency asset management firm, and it sued the SEC in June of last year after the agency denied its request to convert the Grayscale Bitcoin Trust into an exchange-traded fund. At the time, the SEC said Grayscale's proposal didn't meet anti-fraud and investor protection standards. Grayscale's rebuttal was that the SEC had previously approved surveillance agreements geared at preventing fraud among Bitcoin futures ETFs. Although its proposed ETF would track the Bitcoin spot price, Grayscale believes the same setup should work. As mentioned, the Court of Appeals agrees. In its ruling, it said the SEC had not explained why it doesn't agree with Grayscale's correlation between Bitcoin spot and futures prices. However, that doesn't mean Grayscale will be able to launch its Bitcoin ETF right away. The SEC now has 45 days to appeal the ruling, and it's currently reviewing the decision in order to determine its next steps. That hasn't stopped Bitcoin enthusiasts from celebrating. Grayscale believes it's a matter of when, not if, the ETF is approved, and prices for Bitcoin and other cryptocurrencies spiked when the Court of Appeals decision came out. We'll be watching closely to keep you informed about what happens next in this sector. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our report or any article mentioned in this video. We'll see you next time.